Welcome to When the Facts Change for this, my third show. When the Facts Change is released every Friday morning exclusively on my When the Facts Change Substack. Thanks to all my subscribers for supporting me and for supporting independent media generally. Now, the big story here in the UK is that the Bank of England has cut its main policy rate by 0.25%, that is 25 basis points, to 3.75%. This wasn't a surprise, but still worth examining in detail, albeit in an accessible and hopefully interesting way, and that's what we do here on When the Facts Change. This is the 6th rate cut from the Bank of England since last summer. From December 2021, the bank's Monetary Policy Committee raised rates from emergency COVID pandemic levels of 0.25% all the way to 5.25%, bearing down on the post-lockdown surge in inflation. Since August 2024, as inflation has abated, the MPC's cut rates 6 times, down to 3.75% today. As When the Facts Change readers know, prior to yesterday's move, I argued on my Substack that rates should be held. UK inflation remains toppy at 3.2%, way above the 2% target and far higher than comparable G7 countries. But serious, highly influential economists disagree, including Dr Gerard Lyons, former Chief Economist at Standard Chartered and someone with a superb forecasting record over many years. Well, I'm delighted that Dr Lyons joins me here in the When the Facts Change studio, so we can argue it out. Gerard, you're most welcome. In other news, the European Union's made major changes to its net zero rules, pushing back the upcoming ban on the sale of new petrol and diesel cars from 2035 to 2040 at the earliest. This follows intense pressure from European car makers. Much of the industry worries the ban will see home markets flooded with heavily subsidised and therefore much cheaper Chinese-made electric vehicles. This dramatic shift by the EU, which came to light late last week and which I covered in my latest Sunday Telegraph column, piles pressure on Labour's Energy Secretary Ed Miliband. Labour have brought the UK's ban on petrol and diesel cars forward from 2035, where the Tories left it, to 2030, to appeal to bien-pensant left-wing voters. But increasingly, Britain's automotive industry is speaking out, not least Robert Forrester, co-founder and CEO of Virtue Motors, the UK's third largest car retailing chain. Robert Forrester joins me from Virtue Motors HQ up in Gateshead on Tyneside to discuss the future of Britain's car making industry, which employs upward of 1 million people here in the UK. And finally, in this action-packed edition of When the Facts Change, we're going to talk about Argentina, where President Javier Milei, who's some dub an anarcho-capitalist, has been in power for 2 years now, and he seems to be making huge progress. A former tantric sex coach who cloned his own pet dog, Milei is often dismissed as a joke, but the man running South America's second largest economy, who campaigned for office using a chainsaw as a symbol for much-needed government spending cuts, seems to be having the last laugh. While there have been protests, Milei's popularity has been rising, as he slashed back the civil service, reined in a kleptocratic state, and brought inflation down from well over 200% to less than 30%. With Argentina being cited by some Western politicians as an inspiration for our own much-needed reforms, I'm joined from the capital, Buenos Aires, by Robert Marstrand, a long-time resident of Argentina, businessman, investor, and author of the Of Wealth Substack. It's great to be releasing this show here on When the Facts Change. This will now be a weekly offering released on Friday mornings for my paying subscribers. Thanks again for supporting me here on When the Facts Change. So let's get going with our first guest here on When the Facts Change. The Bank of England has cut interest rates by 25 basis points to 3.75%. It's its 6th cut since last summer. I'm delighted to be joined here in the studio, as I said, by Dr. Gerard Lyons. Gerard, you're an economist of some influence. You are currently Chief Economist at Netwealth. You were formerly Chief Economist at Standard Chartered. You're on the board of the Bank of China. Great forecasting record. A friend. We've been co-authors in the past. Yeah. But on this we disagree. So We are recording this just after the Bank of England made its move. We should make that clear. Why were you so sure that cutting, when inflation's still at 3.2%, when we're still an inflation outlier across the G7, why was the MPC right to cut rates?
Monetary policy needs to be forward-looking. Quite frankly, I think the Bank of England over many years has done a terrible job, but my criticism of them is not about their independence and their integrity. It's often been about their competence and their credibility. But more recently, I think they've started to come into line with where they should be. I thought this was a rate cut that was justified. And in answer to your question, the main reason is that monetary policy must be forward-looking, and the inflation outlook suggests that inflation is heading down. Recent inflation data, we had inflation figures out just the other day. First monthly fall in inflation since January. In fact, in the last 3 months, inflation has risen by an annualized rate of only 1.4%. But more importantly, in terms of looking ahead, I think we'll hit the inflation target around next April, 2%. So the key reason why I think the bank was right to cut rates was inflation is trending down. Also, I think the balance of economic risks is to the downside. The economy is very fragile, very weak. Confidence is vulnerable to any shocks. And I think the balance of risks suggests that rates are still restrictive and they should head lower.
Good answer. Clearly, you're in the majority. There's a sort of consensus among economists, most economists, that rates should have been cut. There are some notable holdouts. Julian Jessup, Jagit Chadha, who ran the National Institute for the best part of 10 years. Andrew Sentence, formerly of the MPC. Myself, we've been quite vocal. We think that the bank should have held. And I don't speak for the other economists I mentioned, but from my perspective, Gerard, I guess, the Bank of England said at the end of 2021 inflation was going to come down. When people like me, and indeed you, were warning about a post-COVID inflation spike, we were chided. We were almost laughed at by name at Bank of England press conferences. Oh, don't worry, it's transitory, old boy, as Andrew Bailey would robotically keep saying. And yet, this latest rate cut, it was him, the governor, who changed his vote, switching it from 4-5 against a rate cut at the last MPC meeting to 5-4 in favour of a rate cut. Now, why should we believe Andrew Bailey? He hasn't even got a degree in economics. He's a historian. When he was so wrong about inflation, so wrong, in fact, in 2021, that we had to get Ben Bernanke from the Federal Reserve in to examine the Bank of England's forecasting.
Let's take the past and then we'll come on to the current situation in a minute. Completely agree with you about the past. In fact, when we were going through the pandemic and just coming out of it, the Bank of England said that inflation would be sort of transitory. But basically I said, which P is it? Is it going to be permanent? I didn't think it was. Will it persist? Or will it pass through? The Bank of England was saying it was going to pass through. It was quite clear then it was going to persist. And I, like you, have been correct on that. Also, importantly, 2 weeks ago, the Bank of England, the governor, sent a letter to the Chancellor, which I thought merited a lot more attention, which in my mind shows he's completely wrong quantitative easing, quantitative tightening, and the payment of bank rate on bank reserves to commercial banks. These are big issues which are going to come back.
Let's come back to that. Let's come back to that.
So there's lots of reasons to think, because they've been wrong in the past. Actually, the most noticeable example was when they sent a letter to city firms to say, be prepared for negative rates. Now, it didn't mean that they were going to move to negative rates. This was
negative nominal rates.
This was during the pandemic. Now, at that time, the Bank of England thought quantitative easing was necessary. They eased monetary policy with low rates and QE,
creating more money.
And lots of people on the outside tend to think that the inflation we've seen has been largely a consequence of Russia invading Ukraine. They often forget that the day those tanks went in, inflation was more than 3 times the target. So the Bank of England, up to now,
it was at 5.4%. It was at a 30-year high in January 2022 before Russia invaded Ukraine in February. And that's why it went up further.
That's right. So their track record's been poor, so it's easy to be critical. Like you and
so we agree on the past. Now, so why don't you infer the future from the past?
Right. Rates today, or when this comes out, yesterday, have gone down from 4 to 3.75%. I think that's above where they should be.
Interesting.
I think neutral rates is around 3.5%, based on inflation of 2%, growth around 1 to 1.5%. So 3.5% nominal GDP implies in my mind where rates should be. But over and above that, it's the outlook for growth and more particularly inflation. And it's reiterating the point I said at the beginning about the inflation outlook. Inflationary pressures are easing for a number of reasons. One, the domestic economy is soft. So service sector inflation is currently high. It's stubborn. It's 4.4%.
Yeah.
It is trending down. I think it will trend down further. Goods price inflation is 2.1%. Again, less than service sector inflation, but it's been persistent for a while. I think the big thing the markets are underestimating next year is the disinflationary effect from global competition. I've been in China a couple of times recently. China is hyper efficient in terms of its export sector. Since June 24, the big word, or one of the big words in China, has been involution. Intense competitive pressure in the manufacturing sector. It's across the board, but particularly evident in electric vehicles and in solar panels, but quite evident elsewhere. Chinese exports are intensely competitive. Their currency is effectively mirroring the dollar, so it's becoming more competitive. Over next year, and we're already seeing signs of this, I expect to see China contribute to a large disinflationary wave across Western Europe. So it's domestic factors.
So cheaper Chinese goods coming to Western markets again, acting as an anti-inflationary force, keeping a lid on headline inflation.
So three factors really. One, domestic economy soft. So that will ease, but not fully remove domestic inflation pressures. Second, this intense international competition. China exported low inflation the early part of this century, so much so that at that time in the city, people used to joke the CPI should be renamed not the Consumer Price Index, the China Price Index. So the competitive international environment. And the third factor is we've got a number of domestic factors. Some of these, you might say, are temporary, but they're linked to the budget. Nonetheless, they'll feed through. In April, household energy bills will be cut because of budget measures, and fuel and other duties are being frozen. So that will knock 0.4% off inflation then. So the bottom line is domestic economy soft, inflationary pressures softening, external competition intense, pushing inflation down, plus other measures linked to policy. So I think by next April, we will see inflation down to 2%. Over and above that is where the balance of risks then lie. This is why I think inflation not only will be soft next year, but interest rates will go down to 3.5%, I think, by the spring. They could go below that into accommodative territory in the second half of 2026 if the domestic economy proves weaker. Now, the important point to take away from this is that even though we're disagreeing, even though I think I'm right on this, I would probably agree with you that the important lesson from the last few years is that we must not return to cheap money. What we saw in the pandemic, and indeed for much of the previous decade, was cheap money led to a build-up of pressures. Basically,
interest rates down at 1 to even less than 1%.
And it's important to stress.
Negative in real terms, negative after inflation.
Right. Britain is a low growth, low wage, low productivity economy. And unfortunately, it's also become a high public spending, high tax, high borrowing economy. But the key thing is 2008. We've had, let's say, 3 phases of monetary policy in terms of QE, which went from the good, the unnecessary and the bad since 2008. 2008, it was good that we had quantitative easing to address the problem, stop deflation.
A £50 billion programme when it was announced in early 2009.
If only. Then we had this long phase of cheap money, which was unnecessary. And then after the pandemic, QE was bad. But the low interest rates, because most people tend to look at low interest rates, it fed to real problems because it basically led to asset price inflation, intergenerational problems as property prices soared. It led to the markets not pricing for risk, misallocation of capital, zombie firms stayed in business, growth companies couldn't access funds, and it fed the recent pickup of inflation. So importantly, we must not return to cheap money. Also, as we've said, the Bank of England's had a poor track record. That will make lots of people sceptical about the Bank of England getting it right. But in terms of where we are in terms of this stage of the cycle, one of my big criticisms about monetary policy has not only been all the factors I've mentioned, but when it comes to Bank of England meetings, it's so reactive. We often respond based on the last month's data, and there's always an element of that. But monetary policy, as you and I know, acts with a long and variable lag.
That's what Milton Friedman taught us.
No one is quite sure how long that lag is, but it used to be accepted it was 12 to 18 months. Now you look at Bank of England data from beginning of December for the rates that small and medium-sized firms were borrowing at in October. That picked up. That picked up despite interest rates trending down. So in the real world, at 6.42%, I think it was, small firms are borrowing at in October. Obviously, sometimes it's even higher than that. Borrowing by small firms was only 1.9% in the year to October. Monetary growth, broad money growth, is only 4.4%. All of this is consistent with modest growth and inflationary pressures being not on the upside, but more on the downside over next year. So I think there's a strong argument for monetary policy to adjust to the reality of where we are now. Where would I like to see base rates settle? 3.5%. I think that's neutral.
Another quarter point cut.
But I would see the ability for interest rates to go lower next year if those balance of risks in terms of inflationary pressures and growth go more to the downside. Where will we be in 2 years' time? Different issue, but I would be thinking neutral rates should be thinking for 3.5%. And that's where, if one's looking 12 to 18 months ahead, where rates should get to.
All that's very well put. You have got a fantastic forecasting record. Indeed, you've been tipped in the past, not least by me as a potential Bank of England governor. So, what you say and what you think, Jerry, I'm not just saying this because we're old friends, but is genuinely of significance here in the UK, not least in the City of London, just up the road, but also in Westminster and Whitehall as well. But I will push back because in my view, I don't think a rate cut is really going to do much to help growth to the extent the Bank of England should be focusing on growth. Less than a third of British households these days have a mortgage.
That's right.
3/4 of mortgages are fixed rate anyway, so they're not going to immediately be helped by a Bank of England rate cut. That's one thing that I think is a concern. I think there are still big inflationary dangers in the system, not least because of taxation and regulation, government decision making, minimum wage hikes coming in, business rates hikes coming in. Taxation is inflationary, right?
Yeah.
And there's a lot of that taxation going around. And my big caveat on inflation, it's not about demand push inflation. It's not about demand pull inflation. It's about so-called cost push inflation, as I explained in my latest Substack post, is the oil price. You know well, the oil price is benign at the moment. It's 60 odd bucks a barrel because OPEC are trying to squeeze out the smaller quota cheaters within OPEC. But when the Saudis and the Kuwaitis and the people that actually run OPEC want to get back to their target range of 80 to 90, as the global economy picks up, as China comes back on stream, as you rightly say, that's going to massively hurt the UK's headline rate of inflation because we're a big net oil and energy importer. That's going to go straight to our inflation top line, if you like. So I am concerned about inflation. I'm concerned about a wage price spiral. I'm concerned about, stroppy trade unions taking labour for a ride, pushing up wage inflation. But above all, and this is the point I'd end on, this is, it's great to hear your case, and most economists, certainly most economists in the city, agree with you. Everyone in the city likes a big juice up of the stock markets, which is what we're happening now as we speak. Even though this is expected, there's a kind of relief rally going on with equities. But look at bond markets, look at sovereign bond markets. I'm not going to overdo this, but in the few minutes since we've had that rate cut decision, the gilt yield has spiked upwards. Let's see where it is over the next few days. I'll be writing about that. But this is my concern, Jerry. It's a phenomenon called rate splitting, which I've written about a lot, both in the Sunday Telegraph and on my When the Facts Change Substack. Since last summer, as you and I have documented and discussed obsessively, the Bank of England's cut the base rate from 5.25 now all the way down to 3.75, right? 6 successive cuts. Over that period, the UK's 10-year gilt yield has gone up almost the same amount, right? That should not be happening. That should not be happening. That is a sign of financial distress. And my concern is that financial markets, when all said and done, not the fly-by-night equity investors that just want to make a quick turn, but long-term bond traders working for the big insurance companies, pension funds, sovereign wealth funds, the kind of institutions you know well and have advised over many years, as have I, they're going to think, we don't believe in this low inflation story from the Bank of England. We think Bailey's a yo-yo. He doesn't really know what's going on. Yes, there are some quite good people on the MPC. I agree with you. I think the likes of Catherine Mann, Megan Green, they've shown some intellectual grit and determination. I admire them for that. But I think most of the MPC are yes men and women. Under political pressure, they bow to that. I think a lot of people in the bond markets think the same. My concern, Jerry, is that this rate cut is going to look like a panic measure by the Bank of England under political pressure to give some good news, pro-growth headline to the Labour government, which is struggling. In the end, it's not credible at a time when the UK's policy-making framework, in the aftermath of this easily the most chaotic budget of our lifetimes, I would say. I think the UK's policy-making framework lacks credibility. I think we could have banked some credibility by saying, yeah, inflation's down over the last month, and yeah, the politicians want us to cut rates, but actually, no, we're not going to cut rates. We're going to say we are not yet sure where inflation's going, which is really the truth.
Well, okay.
Final word.
Okay.
Before we come back.
I don't think UK consumers, small businesses or the corporate sector should bear the burden of incompetent economic policy in the UK.
Yep.
And all you've said...
But the Bank of England should correct for incompetent economic policy.
No, what the Bank of England is finally doing is actually trying to be... Well, I'm not sure if they're trying to be. The reason I would say rates were correct to fall is because of the economic risks and because of the forward-looking nature that monetary policy should be. There are so many moving parts. Economic policy in this country is incompetent. The Treasury gets it wrong so often, but not the people who work in the Treasury, the people at the top, the politicians there. I thought it was a very bad budget. We are a high borrowing economy. The fiscal numbers do not look good. In terms of the global picture, though, really fascinating issues here. In terms of global financial markets, there is ample liquidity. In fact, one of the most worrying indicators recently, again, didn't really receive much coverage, was just this last week. The Financial Stability Board, who are an international body, don't have any teeth, but they've been entrusted to sort of keep an eye on shadow banking. The shadow banking sector, which has some longer-term investors in terms of pension funds and insurance companies, but also has a lot of high leverage sectors.
These are unregulated banks that extend money to institutions and highly sophisticated investors.
Shadow banks now account for more of global financial assets than banks.
Wow.
And also in the summer, most people didn't talk about this, the Bank for International Settlements separately talked about how as bond issuance has risen globally, we've seen the non-bank financial institutions, NBFIs, shadow banking, buy more of those global bonds. So the global financial system is driven by a lot of liquidity. So in that respect, one needs to be cognizant of the fact that if global financial conditions tighten over next year because more countries raise interest rates, that will have an impact on global financial markets. World economy at the same time, as you touched on implicitly, is only growing at a modest pace. I don't see the spike in oil prices and other issues that you've touched on. It's possible, of course, because the dollar itself is trending weaker. But the point is there are many moving parts. Global economy is only growing at a modest pace. We should be aware that there's lots of liquidity driving financial markets, which is why some people are very nervous. But at the end of the day, these factors do not, in my mind, prevent UK interest rates returning to where they should be in terms of neutral for the next year or so. Neutral, as I say, is 3.5%. Inflation is trending lower, but there are persistent problems in the UK. Now, if the UK economy turns out to be strong in the next year, and what's the positives? Savings ratio is good. We also have corporate balance sheets not looking too bad. So if costs feed through, firms could, if they saw pickup in demand, pass those costs on. But the reality is that demand's pretty sluggish. Housing market is pretty flat out there. That drives
high taxation, mad stamp duty.
If you look at the lending data, that's not suggesting the economy is about to take off. The jobs data, partly because of what the Chancellor did in 2024 and 2025, is not particularly good. Payroll employment
is down very heavily.
Down 171,000 in the last year. Look at graduates. Graduates are now facing two problems. They're facing higher marginal tax rates of 9% extra to pay off their student loan. You might say that's a good thing, but it's hitting them.
Yeah.
That's if they get a job.
Yeah.
As we've seen, entry-level jobs are now disappearing.
AI. Yeah.
You look across the economy, the jobs market is soft. Some people are in a very fortunate position with high savings, confident about their job. They'll benefit from a real income gain over next year because inflation's lower. So the economy has lots of nuances. Bottom line is growth in next year will probably be 1 to 1.5%. Modest growth, but there are downside risks. Inflation is high currently, but it's trending down. By spring, it will be 2%. I think there's a case for another quarter point cut in the spring. Neutral rates are 3.5%. 2 years' time, I'll probably be coming back here and saying, you know what, rates should be nearer 4.5%. But the reality is the balance of risks are heading down. We are badly run economically. The Bank of England doesn't have a great track record. And you know what comes out of all this? There's a need for someone to give an economic vision, not just to actually talk out where the economy should be in 12, 18 or 24 months, but to actually reassure people about why things are as they are. And we don't have that economic vision. It was lacking in the budget. And I don't think we get that.
It's been lacking for years. It's been lacking for years. Jerry, I've got huge respect for what you say. You make a compelling case. Inflation will be 2% next spring. I'll mark your card on that.
I haven't said Fulham are going to win the FA Cup.
You haven't said your beloved Fulham are going to win the FA Cup.
I've only said inflation at 2%.
Because you wouldn't want to sully your forecasting track record with such a reckless forecast. Look, we're going to come back to you in a moment, but for now, I urge everyone to follow your writing. You write in the Times, you write in the Telegraph, all over the place, always worth listening to. So for now, just stay with us, Gerard Lyons. It's great to have you with us here on When the Facts Change. Now we're going to hear from Robert Forrester. He's the co-founder and CEO of Virtue Motors. Virtue Motors, as I said at the top, is the UK's third largest car retailer. It's a business with more than 200 outlets across the country, selling almost 250,000 cars, vans and motorbikes every year. Now, Virtue's boss, Robert Forrester, is a fan of electric vehicles, or EVs, but like some other senior figures across the UK's automotive industry, as in the EU, he's become increasingly vocal about the dangers of introducing a ban on sales of new petrol and diesel cars too quickly. I started by asking Robert Forrester how he felt when he learned recently that the EU was shifting its ban from 2035 to 2040 at the earliest, while the UK's ban remains at 2030.
Yeah, I think I was actually very pleased because although we're not in the European Union, it's a major part clearly of the European integrated car market. And for such a major move to take place, I think is useful for the UK because it shows a pragmatic direction of travel that we need the UK government to follow. So the fact that our major trading partner, and we're not manufacturer, we manufacture a lot in the UK, but we export a lot to the European Union and vice versa, then I think it helps the arguments in the UK that the net zero agenda is all well and good, but if it destroys the industry that it's trying to regulate, it's a bit pointless. And with 1 million jobs nearly in the United Kingdom in automotive retail, manufacturing, supply chains, this is not small beer for the future of this country. So actually, I was pleased the European Union have started to be more pragmatic. They always were more pragmatic. Actually, our rules have always been tighter than the European Union since Rishi Sunak days. So I was pleased because I think it shows a good direction of travel.
That's right. It's worth saying that even since we left the European Union after the vote in 2016 and the withdrawal agreement in 2019, 2020, our rules have become actually tighter than the European Union.
No, that's right. I mean, many people voted for Brexit for divergence, but, divergence was meant to be a good thing, not economic suicide. And, tighter regulations, which we've certainly seen, we've got the most tight transition in terms of targets, alongside the most vicious fining regimes on manufacturers in a country that once had a very thriving automotive manufacturing sector.
Absolutely. And explain to viewers the way you explained to me quite a long time ago now. I was pretty astonished how the rules work, the fines that car makers come up against here
Yeah.
in the
So
UK if a certain percentage of their cars that they sell aren't petrol and diesel cars, and how that's leading to an actual decline in the production of petrol and diesel cars?
Yeah, so there are two mandates the government has set up, one for cars and one for vans, and they set a percentage target of the amount of the new car or van market that has to be battery electric vehicles. So forget hybrid, it's got to be battery electric vehicle. And it started out in the low 20s a couple of years ago, and actually in 2025, the target for cars is 28%, and in 2 weeks' time, on the 1st of January, that target moves to 33%. So 33% of cars in 2026 have to be battery electric vehicle in terms of new cars. Now, if you don't do that as a manufacturer and you miss that target, every car that you miss in that percentage target, you get a fine of £12,000.
That's
Now,
massive.
it's
Absolutely
astonishing.
ruinous.
Actually, last year it was £15,000. So they have brought it down a bit. But there are very few cars where the manufacturers make £12,000
as their margin.
For their margin. And this is causing a lot of problems for manufacturers, which, one, who wants to pay millions of pounds in fines? Two, there are a number of ways of getting to this percentage. You either increase the number of battery electric vehicles or reduce the amount of hybrid and petrol cars that you sell. That has caused an astonishing amount of grief for manufacturers, because if you increase the amount of electric vehicles into the market, you have to reduce price to get the demand for them. And they are losing money on every electric vehicle they sell to an astonishing degree. So they build factories, they do the R&D, and actually they have then to massively discount the electric vehicles into the market. So they lose money. They make money on petrol, diesel, and hybrid, but that's part of the market. If you have a percentage, the other way of getting to the target is you stop selling petrol, diesel, and hybrid cars where actually you were making money. So you've got this vice almost around the manufacturers. At the time, they're facing very strong competition from China, and they're impacted by tariffs from the US, and it's making the automotive industry in UK very, very difficult. And the manufacturers, whether they're based here or they're based in Europe or in the Far East, are finding it very difficult to make money in England and the United Kingdom in general. That is not a good thing. What it's actually doing to the market is we will be rationing petrol and diesel and hybrid cars next year. There is no doubt, if this mandate continues.
Making fewer of them in order that the slow demand for EVs that there still is, because of range anxiety, cost and all the rest of it, it isn't high enough in order to hit the government's target. The only way you can hope to target as manufacturers is to make fewer of the petrol and diesel cars, so the smaller number of EVs is a higher percentage of a smaller of overall.
It is a mathematical certainty.
of overall sales. Now, you're not a car maker, you're a car retailer. No. You're a huge voice in the UK car industry and globally. You just are, because the size of the company that you've built with colleagues, and because, frankly, Robert, you've had the guts to be quite outspoken. The car industry, it's very political. There's lots of subsidies for car makers floating around, lots of very employment-intensive plants and marginal constituencies and so on. And for quite a few years, big car makers in the UK, they've been happy to take subsidies, transition to EVs, all happy, clappy, all the rest of it. Doesn't matter that all the batteries are coming from China. Doesn't matter that we need rare earths that aren't controlled by us or countries friendly to us. It's been happy, clappy. Let's just do EVs, Tories and Labour. And the car industry has got on with that because it received subsidies. It strikes me now, with you as a very serious car retailer with huge links to and bonds of trust with car makers around the world, which you have, you and other car retailers and increasingly now car makers, starting to speak out using strong language, saying this is crazy. We've seen the plant close at Luton. We've seen BMW stop production of minis at Cowley. We've seen threats that if this ban goes through, the Tories pushed it back to 2035 under Sunak, having originally put it at 2030. Miliband, virtue signalling to all his bien pensant Labour-lovey voters, has moved it back to 2030. If this ban comes in 2030, the UK car market is going to be absolutely engulfed by a tsunami, it seems to me, of very cheaply made, heavily subsidised by the government in Beijing, Chinese EVs. It could, apart from very high-end car making, it could wipe out our mainstream car manufacturing industry in this country, which still, as you said, employs upwards of 1 million people, often in parts of the country, providing good jobs where there aren't, with all respect, that many well-paid jobs, not least the Midlands and the Northeast, where you are based.
Yeah, I mean, BMW halted the investment in Cowley. They still make cars in Cowley, but they did halt the investment. So your thesis is interesting. And the Chinese dynamic, the Chinese make fabulous cars. And they have got a march in terms of research and development and battery technology on the Europeans. That is without doubt. And we partner with a number of Chinese manufacturers. But in terms of economic growth, which, let's be fair, we should all be interested in, putting regulation and fines into one of the major sectors of the economy, which is exactly what's happened, to reduce the size of that market has implications on manufacturing investment, on manufacturing jobs, and also on the retail side. You would need less dealerships if the market's lower. And we are certainly seeing dealerships closing in the United Kingdom. There is no doubt about that. This whole zero-emission vehicle mandate is putting negative pressure on economic growth. You actually saw, and it wasn't a great thing, how important the UK manufacturing is in the car market to the UK overall economy. The cyber attack on Jaguar Land Rover actually led to a noticeable decline in economic activity.
It totally drove the headline GDP number, which turned into a contraction.
That's right. I think actually that's interesting. So from where I sit at the moment, I'm being relatively outspoken about it because it impacts the business that I run. And actually we employ 7,800 people. And we're responsible for the mortgages of those people and their employment. And I think we just have to state facts. The government's policy is odd. They've got these massive fines and targets on the one side, and then in the budget announced we were going to get levies on a pay-per-mile basis for using electric vehicles and hybrids, which puts another break in the minds of the customers.
Denting EV demand even more.
Yeah. So the ZEV mandate is not a good policy. We will transition to electric vehicles over the next 10 to 15 years because they are excellent and they're getting better. And this is where we'll end up. But we are intervening in free markets to the detriment of economic growth to produce a transition that is far too quick for the market to absorb it, putting immense pressure on companies, businesses and jobs. And that doesn't seem very sensible to me at all. And the Europeans have got that message. The Americans have got that message. We are out of touch and out of kilter with the rest of the world. And I think I'm right in saying we're something like 2% of the global car market. So, we've got to just know our place. The manufacturers are not going to change their entire direction of strategy globally because somebody in Whitehall decides this would be very nice.
What do you think will happen now, Robert Forrester? Ed Miliband is in place. He's very popular among Labour activists. He's very popular among backbench Labour MPs, economically illiterate as so many of them are. Has Starmer got the guts, the power to rein him in, to try and knock him off his perch of net zero?
Well, I mean,
and what happens if it doesn't change?
Well, if the ZEV mandate doesn't change, then the used car market will be very difficult next year. It may very well go down, certainly on the retail side, which is already depressed, actually, in my opinion. And that will put further downward pressure on economic growth because the manufacturers will struggle and retailers will have an impact as well. I think there is so much pressure on the government now to get economic growth and to try and get rid of the things that are holding the economy back. The jobs market being a very good example. Lower inflation sounds a very good thing and actually is a good thing in many ways, but it's a harbinger of recession to many people when you start to get deflationary pressures in the economy. I think reality will come to bear. I think the fact the Europeans have moved, the fact we've now got strange conflicts going on between fines and targets and then the levy and the overall picture from the consumer is what we actually need, and I think it will happen, is an urgent review of the ZEV mandate by the government to bring it more in line with the reality of where the market is and the reality of where the global automotive sector is. And I think that will happen. We've already seen the Reform Party. Sorry.
So you think even if Miliband, buries his pride and his vanity and shifts the mandate back from 2030, say, to 2040, the ban on new petrol and diesel cars, which is where the European Union have got it at the moment, and it looks as if 2040 at the earliest. So powerful are the German, Italian and French car makers pushing Brussels around now. Do you think that will actually happen now?
Well, to be honest with you, whether it's 2035, 2040 is broadly irrelevant. What the industry is actually interested in, what's it going to be over the next 3 years?
Yeah.
On the 1st of January, it's 33% battery electric vehicle mix. By 2030, it's 80% battery electric vehicle mix.
Yeah.
My brain doesn't get to 2030.
Yeah.
There's enough problems actually with this mandate between now and 2030 to start worrying about what regulation might look like in the 2030s. It is imperative that the industry is given assistance, not in terms of subsidies, actually, but in terms of the regulation being revised so we can get back to some degree of free market economics where consumers choose what they want to buy. The manufacturers produce fabulous product that consumers want to buy, and we can actually not distress great electric vehicles by discounting them to ridiculous levels. And we can get back to manufacturers making some profit.
Amen to that. And just before you go, Robert, basically what you're saying is, you seem to be saying, and it's a very important message, look, we are moving to EVs. It will happen. They are getting better, right? It's not like you're anti-EVs. You're not.
I drive one.
They are getting better. We will move to them, but overzealous politicians are pushing it at such a pace that they're doing serious economic damage to an industry that's already making changes and is economically of vital importance.
Yes, in summary, and it's not a party political point, actually, because the Conservatives introduced this policy. Labour have carried it on. So I'm not interested in politics. I'm interested in making sure that we have a vibrant economy where automotive plays its part in creating jobs, creating corporate taxes that can be taxed to fund everything that needs funding, and we can play our part. At the moment, we're going into battle with our hands tied behind our back and broadly blindfolded.
Robert Forrester, CEO of Virtue Motors, as ever, fun and informative to talk to you. Now, since the early 70s, Argentina's been an economic basket case. Resource-rich and full of potential, but notoriously badly run, the Latin American country's been bailed out by the International Monetary Fund 23 times. Argentina's annoyingly talented football team have won the World Cup on no less than 3 occasions, but the home of Maradona and Messi has chalked up 9 sovereign debt defaults. Since winning election in December 2023, though, President Javier Milei has imposed an economic revolution, slashing back the size of the state and running Argentina's first annual budget surplus in over a century. His success has been widely noticed, and not only in the West. Bolivia and Chile have recently elected reformist governments, taking their cue from the man that the Argentinians call El Loco. Now, Robert Marstrand is a business analyst and investor, a Brit who's spent many years in Argentina. Talking to him from his home in Buenos Aires, I started by asking him that it must feel pretty incredible that Argentina, long seen as one of the world's economic tragedies, is now suddenly being lauded by some as a template for reform in the West.
Yeah, it's very exciting. I mean, who would imagine it might happen here, given all the chaos of the past? And I've certainly seen some ups and downs. I've lived here 17 years, and I first came here 23 years ago. And that first visit 23 years ago was right after a massive debt default and currency devaluation of about 2/3 almost overnight. So it's a volatile place. And we have this very exciting new experiment that's happening, which is basically slash the government, return freedom to the people and to business. I believe Milei's government is the most pro-capitalist in the world, bar none.
Wow.
However, the rot runs deep, and there's still a long way to go before you can say the same about the country. And I mean a lot.
Now, I was in Argentina a bit in the early 2000s. I made a documentary for Channel 4 back in the day after an episode you'll know well, the so-called corralito, when the banks prevented people from getting their dollars that they deposited at banks out, and instead they had to take pesos, and those pesos had been devalued overnight very significantly. So a lot of the middle class, yet again in Argentina, lost their savings. There were a lot of allegations that the well-connected, the political classes knew about the corralito, so they got their money out in time. It really was a period of desperation for Argentina, a country that's had more IMF bailouts than it's won football World Cups, and it's won a few of those. And yet here we are 25 years on, if you like, and things have really changed. Inflation, as I understand it, has gone down under Milei from well over 200% to nearer 30%. Still toppy, but by Argentinian standards, a huge improvement.
Well, yeah, inflation peaked at 289% backwards looking in April 2024. It's now down, as you say, 31% latest reading in November, 2.5% a month. I do smirk a bit when people worry about inflation going up a 0.1 or 0.2% in the UK, whereas here, but yeah, it's dramatic how things have improved, and basically that's by doing the sensible stuff, which is eliminating the fiscal deficit, stopping money printing, and slashing back the size of the state. But we can talk more about that. But perhaps just for viewers who aren't familiar with Argentina very much, I could just give some really basic facts about the place just to set the scene. So, used to be a very wealthy country 100 odd years ago. In fact, Teddy Roosevelt, the old, the US president, came here on a visit in the early 20th century. And he wrote that he was amazed that the Argentine millionaires lived in more impressive houses than any of the millionaires he had come across in the USA. So that gives you an idea of how rich the place was. Then Peronism came in the late 40s under Juan Domingo Perón, which was, depending on who you believe, it's kind of socialist or quasi-fascist. I mean, I'd say they're both left-wing, really. But it was much more about big state intervention and populism and so forth. The rot really started, I think, in the 60s, or after the 60s, I would say, from the 70s onwards. And it's been downhill ever since then, as the middle class has been gutted. But the potential is massive because, this is the eighth largest country in the world. So it's one behind India. Population's about 48 million, similar to Spain. Huge natural resources in farmland, oil and gas, which has now been exploited, copper, gold, lithium, etc. So it should, by all accounts, and basically European heritage, because most of the people here are descended from Spanish, Italian, or other Europeans, British,
and a lot
French.
of smart people as well.
A lot of smart people in a very difficult environment. And so, it really should be as rich as a place like Australia or Canada. But it's self-inflicted damage over many decades. But now, fingers crossed, the tables are turning and things can get better.
You've taken, you took an enormous bet in your life on Argentina. You've become wonderfully fluent in Spanish. You've really immersed yourself in the culture. And I know you care deeply about the place, which isn't always easy as a Brit, right? Given the history between the two countries, and we can come on to that a little bit. But just tell us what's going on the streets, Robert. Obviously, you're based in Buenos Aires, as I said in the introduction, but I know you travel around a lot. For the main thing I want to know, I read in the papers that Milei, his reforms have obviously been controversial. Obviously, there have been some protests. A lot of the sort of state kleptocrats have been protesting. And yet I see he not only won election a couple of years ago, he's just won the sort of Argentina's equivalent of the congressional midterms. He's actually increased his majority in parliament so much that the other parties can't now block him, can't issue kind of, lawfare suits against him. He's actually consolidated his power, even though he's doing things that on paper look really, really difficult and unpopular, like slashing public spending, slashing the state in general.
Well, just a minor correction. He still has a minority in both houses of the Congress.
Yeah.
However, what he did achieve in the midterms is he got above the third that you need to block when the opposition tries to overturn a presidential veto. So the presidential veto is important because the Peronists and others have tried to introduce spending bills to mess up the fiscal surplus. But now they can stop those vetoes being overturned. So that's important. And the hope, of course, is when the next election comes around in a couple of years, that maybe they can achieve full majorities in one or both of those houses. And then actually, if he gets a second term, I think his reforms may become even more extreme, because there's only so much you can do by presidential decrees. Certain things like employment law and tax legislation has to go through the Congress. So we'll see how that goes. I mean, Buenos Aires is a fabulous city. Anyone who's been here, it's very European feeling. It's very leafy. It's basically safe. Not the outlying areas so much, but the center of the city's safe. A little thing people might find amusing. I mean, I'm English here. People might assume that you suffer xenophobia to do with the Falklands or Las Malvinas, etc. Not at all. People are extremely welcoming. It's full of people from all sorts of backgrounds. But a little thing that might amuse people is people who remember the hand of God incident with Maradona in the World Cup all those years ago in the 80s. Well, the bar at the British Embassy here, which exists for the staff and their friends, is actually called the Hand of God.
Love it. 86, of course, images of Peter Shilton, Maradona. But come on, let's get back to the economics, Robert. We're serious people here. How much political controversy has there been? How much trouble on the streets has there been? Are you surprised, as a long-standing resident of Argentina, that this is actually being allowed to happen?
Well, before Milei, under the Peronists, we would have regular mass protests and people blocking roads and creating chaos and so on and so forth. One of the first things Milei brought in was a law which said it was illegal to impede the public highway. So they clear people out of the way if they do that. They also discovered that the so-called, social organizations that were being used as intermediaries to deliver welfare were either clipping a bit for themselves, so taking money from the poor, or were blackmailing people to go to protests and saying, we're not going to give you your welfare payments unless you turn up. So when Milei got to power, all the usual suspects on the left were saying, we're going to have mass protests, 100,000 people into Buenos Aires in January, February 2024. The government set up a helpline for anyone who was being extorted by them. They had something like 10,000 calls within a week or two.
Wow.
And the protests were down to about 8,000 people. So actually the social unrest still exists, but it's on a much smaller scale. It's basically defunding the agitators and troublemakers.
Indeed. And I know you're pleased at what's going on. We've talked about it in recent weeks and months, but does it surprise you? Could it be derailed? Or do you think now the momentum behind Milei, Robert Marstrand, is unstoppable?
Ultimately, it's about whether Milei can maintain his voting support. So far, that's looking solid, particularly at the national level. And ultimately, that, I believe, comes down to whether ordinary people, many of whom live quite basic lives, feel it in their pockets. They feel better job opportunities, better real-term salaries, and also that they maintain optimism that their children and grandchildren are going to have a better future if the project continues. What's interesting is a lot of his support base is in the poorer segments of society, which were assumed to always be a shoo-in for the Peronist vote.
Yeah.
And also the younger segment of society. So social media had played a big part in this, in spreading the word and so forth. So the people that were, expected to go the other way, a lot of them swung to him. So we'll see whether that holds up. We should talk about what the big reforms are. So it's balancing the budget, which you got from a 5% or so of GDP deficit to balanced budget in month one. Now, emergency measures, they slashed infrastructure spending. They just brought it to a dead halt because it was a crisis period. We were heading into hyperinflation. They needed to stop the money printing, etc. But they've maintained that ever since, including this year. Then mass deregulation. And I'll give you a little anecdotal example of the idiocy of some of the regulation in this country. So they created a new ministry, believe it or not, the Ministry for Deregulation and State Transformation. A guy called Federico Sturzenegger.
That's not a contradiction in terms.
Yeah. And he set up an email and then a website where anybody in the country could write into him and his team and say, look, there's this mad regulation that's ruining my business. Do something about it. He gave a good example, which was a guy who was trying to export watermelons. And by law, he was forced to pack them in a particular way for them to be exported. But his customers wanted to receive them a different way, so he had to repack them offshore while they were on ships. No, absurd. It's a small example, but it gives you a clue how silly things are.
Incredibly ingenious solution to a mad situation.
No, it's crazy. It's all just political patronage and creating jobs for sort of non-jobs, really, for people just to keep them occupied. And there's a lot of corruption. There was a lot of corruption in the system. There probably still is. And then, of course, the other thing. So you've got slashing spending. And by the way, they've cut the federal headcount by 18% by the end of October in less than 2 years. They're planning another 10% next year.
So civil central administration 5/5 in a couple of years.
Yeah, and the central administration, basically civil servants and other staff in ministries, are down by 30% already. So it gives you an idea of what's possible if you set your mind to it. And then the other thing is cutting taxes. So a lot of taxes have already come down, especially terrible taxes like export tariffs, which disincentivize production, and import tariffs, which just make things damn expensive. Not that long ago, I read that Argentina had the most expensive iPads in the world because of import tariffs. That's all going away. And then there's, there will be, I think, whole-scale tax reform, but that requires legislation. And the new battle, which just started today, is employment reform, because employees here are a liability. They can sue you even if you... I have a friend who fired somebody from his business because they were caught stealing. And 5 years later, they had to pay the guy $10,000 just to go away. And the lawyers said they could have ended up with a $70,000 bill if they'd taken it right through the courts. Crazy.
Kemi Badenoch here in the UK, Tory leader, of course, recently gave a speech about Argentina, and she called Milei's reforms, quotes, a template for the UK, the sixth largest economy in the world. It does feel, Robert, to me, that a lot of the Western countries are starting to feel more like emerging markets. And now we have one of the most volatile traditionally emerging markets, Argentina, potentially showing the way for the reform of Britain. We've come so far. How have we got here? And do you think Milei himself would be amused to know, maybe he does know, that he's got the successor to Margaret Thatcher, some would say, running the Tory party now, and she's citing him as a positive example?
Well, I think it's amazing on both sides. By the way, I refer to those developed countries, including the UK, as the sub-emerging markets, because that's where they're going. No, seriously, if they don't...
Just because you're living in Buenos Aires, Robert.
I'm very serious. If they don't change track, if they don't get a grip on spending and debt and all the rest of it, and money printing, they are going down. It's just a question of how fast and when it starts.
I could not agree more.
No, but I mean, Kemi praising, an Argentine leader, clearly given the historical political context and the conflict over the Falklands is an extraordinary thing. I have my doubts whether the Tories are really that committed to those kinds of reforms yet, but we'll see where they go. And Milei, who I refer to as Thatcher on steroids, I mean, he's praised Margaret Thatcher numerous times, which is a very brave thing to do in this political context.
Astonishing. An Argentine leader, the warrior queen who took back the Malvinas from the Argentines. Crikey.
Yeah, and look, the whole thing about the Falklands, Malvinas, Argentina's never going to give up its claim on that, I don't think, but they'll pursue it through diplomatic channels. But it's only really used by the hard left Peronists as a sort of dog whistle for nationalism for their base. And most other people don't really take it all that seriously. There's a great quote, actually. Jose Luis Borges, very famous Argentine writer, came up with a quote around the time of the Falklands War in 1982. It sounds better in Spanish, so I'll say that bit first and then translate. He said, "Son dos pelados peleándose por un peine." Bit of alliteration there. It means two bald men fighting over a comb. You can agree or disagree with that, but it's quite funny.
Well, Robert, I think you're in an incredible position at the moment, given where you live. I know you're a very keen observer of economic trends, an investor, and so on. What an interesting time to be living in Buenos Aires. Thanks so much for appearing on When the Facts Change. And let's stay in touch about what is now, I think, one of the most interesting economic stories in the world, the story of Javier Milei's Argentina. Thanks so much, Robert.
Thank you, Liam.
So that's Robert Marstrand, who joined us from Buenos Aires. It's a hugely interesting story, and I fancy a return to Argentina myself at some stage to assess the Milei reforms. Let's see what happens. And before that, of course, we heard from Robert Forrester, CEO of Virtue Motors, on the UK's zero emissions vehicle or ZEV mandate. Very interesting stuff. Now, Dr. Gerard Lyons is still with me here in the studio to round off the show. Gerard, we heard there from Robert Forrester, a leading figure in the UK's automotive industry. Yeah. When it comes to the ZEV mandate, the UK is now an outlier. Yeah. Our ban's still at 2030 and the EU's is 2040 at the earliest. Now, you're in general a macroeconomist, but you follow industrial policy very closely, specific sectors. What do you make of this debate on EVs and this incoming ban, which so many people in the car industry now are saying, while they support EVs, they're saying the ban is coming in too quickly?
Yeah, well, it comes back, looking at it from a policy perspective, what we often see is, say, fiscal policy. Politicians only look for the next 4 or 5 years because that's in their parliamentary timetable, and they ignore the longer term problem coming down the track in terms of fiscal policy. They don't take action to address it now. Then you have all the perverse when it comes to EVs or the green agenda. While it's right to take action to address the green agenda, businesses work on the very long-term time frame. One needs gradualism to address these issues.
Imagine retooling a car plant to go from internal combustion engines to EVs.
It shows a complete lack of business.
Massive amounts of time.
It's daft. It shows a complete lack of business knowledge. It shows a lack of understanding how these supply chains work. The planning periods of which people time ahead. China is going for 2040, 2050, 2060 are the timeframes they're talking about when it comes to these issues. So you do need to take policy action.
So they're obviously expanding EVs massively in China. They account for a huge share of the world's production of EVs at the moment. They absolutely monopolise battery production for EVs at the moment, and yet they're not going to ban petrol and diesel cars anytime in the next few decades, are they?
When it comes to our whole energy policy, what I've been arguing for, and I think this is relevant for EVs, is energy addition, not energy substitution. Basically, you add renewables. Economically, then, as the cost of renewables come down, you add them to your energy mix and they become more important. What you don't do is go for an immediate substitution, where you decide that fossil fuels need to be eradicated overnight at a time when renewable was already relatively costly. And at the same time, when your system, in terms of storage or actually transmitting it, cannot cope. It's the same type of thinking with EVs. You add, you move gradually, you don't try and substitute overnight because it doesn't work for all the reasons that you just heard about. So you need to have sensible ideas here. Yes, the green agenda is important. I'm a full advocate of that. Yes, at the same time, it'd be good to move to EVs. One thing you didn't touch on was all the different measures in the budget. Did you look at that? There was about 4, 5, 6 different measures linked to EVs. Yeah. On the one hand, it was to encourage people with lots of small tax changes, and at the same time, the major change was penalising it.
So pay to drive in your EV. Robert Forrester absolutely believes that. We mentioned it only in passing, you're right, but he is fully cognizant. I talked to him literally straight after the budget. He said, this is crazy, They're trying to encourage EV take-up. They're fining us if we can't sell the amount of EVs they're telling us to sell as a share of our total production. We're rationing petrol and diesel cars for that reason, to try and get our EV sales share up to avoid the fines. And meanwhile, they're making it more expensive to drive EVs. It's a fascinating discussion, and I'm sure we'll come back to it, Jerry, in the weeks and months to come. But just finally, you and I were pretty much wee lads in the early 80s during the Falklands War, during the Malvinas. We then watched, Maradona score the hand of God goal and all the rest of it. As we heard from Robert Marstrand there, the British Embassy in Buenos Aires has got its own bar called the Hand of God bar. Yeah. It is incredible, isn't it? Just the big picture. You're an emerging markets economist down to your fingertips. And that's very much my background as well, emerging markets. Argentina was a basket case. And now we've got Kemi Badenoch, the leader of the Conservative Party, staking out a claim for fiscal prudence, sound economic management, as a lot of people think the UK is heading towards some kind of fiscal crisis. And she calls a man that the Argentinians themselves called El Loco.
Yeah.
She says he has produced a policy template for the Western world, direct quote.
Yeah. Well, I've been in that British embassy, not in that bar, but I've been in that embassy in Buenos Aires. I've been to Argentina a few times. It's a phenomenal country.
Yeah.
People, at the end of the 19th century, one of the debates in the City of London was which emerging market offered better potential.
Yeah.
Was it America? Or is it Argentina?
Yeah.
Hard to believe.
And as we heard from Robert there, Teddy Roosevelt, when he visited Argentina, said, "My God, the rich here are richer than they are in America. What are we doing wrong?" He was, of course, a Republican, unlike his Democrat cousin, Franklin Delano Roosevelt.
Currently, Argentina has done relatively well. Inflation has come down, as you've written about. Its fiscal position has improved. But there are lots of near-term risks, and indeed it has required US help in recent months. Yeah. So let's hold judgment in terms of how this works out. But the real lesson is this, that Argentina has eventually been forced by crisis to confront the problem that many people were talking about before. And it's an important lesson for us here in the UK and in terms of Western Europe generally. Western Europe is the slow growth region of the world economy. You're seeing the bulk of global growth go to the States, China, and across emerging economies. We have a forthcoming debt crisis. 6 of the 7 G7 countries face a debt trap by the end of the end of this decade, ever rising levels of debt that we will find it hard to difficult to finance. We need to confront that challenge now. What Argentina has shown is that often it requires crisis after crisis before people find that they can actually start to confront the challenge. We need to preempt that and start to take action. But Argentina will be a very important case for people to follow, because if they're successful, then that template does become transferable.
For me, that's the huge question, Jerry. Either we need to preempt the crisis if we can, or it may be only a crisis, fingers crossed, only a mild one, that actually moves the political needle in the UK far enough that we actually really get to grips, in my view, with our fiscal shortfalls and that massive debt funding crisis that we face.
I think we're in agreement on that. This is a real big problem, and the budget didn't address it. The Bank of England's cut interest rates. That's going to help us in the near term. But the real issue is that we need to move out from being a low growth, low wage, low productivity economy. And one way to address that is by stop public spending going up, to get taxes down, and to get borrowing under control.
A note of agreement between us for some festive spirit here on When the Facts Change. It'd be great to have you with us, Dr. Gerard Lyons. Thanks for coming to the studio. We hope to see you again back here in the new year. I've got a bit of tinsel there on my When the Facts Change sign, because this is my last show before Christmas. So all best wishes to my subscribers. Thanks to you for supporting me. Best for 2026 to you and yours. And please do join me again here on When the Facts Change. Thanks for joining When the Facts Change, economics and politics in a fast-moving world, with me, Liam Halligan. Please subscribe to my When the Facts Change YouTube channel and my podcast via Spotify, the podcast app, or wherever you listen. And above all, please subscribe to my When the Facts Change Substack for more of my interviews and writing.